Hi, I'm Gene Trowbridge, and today I'm going to answer the question, can I do a fund of funds legally? And the answer certainly is yes. So this is Trowbridge Nay Law Group. We're syndication lawyers. I've been involved in the syndication business for quite a while as a syndicator and an attorney, and I have a book called It's a Whole New Business, fifth edition, and you can get a free PDF of that book when you go to our website. And I'll give you our website address at the end of this presentation. So here's a picture of a typical syndication. The syndication is formed to own a single property or maybe a blind pool. The managing member forms that syndication, does everything necessary to research, underwrite, and purchase the property, qualify for the loan, and then has to raise the money. Goes to the members and raises the money, and they invest in the syndication LLC that actually owns the property. But sometimes a fund to fund is available, and a fund to fund can be good for you who are raising money but don't want to be the full syndicator. So in the syndication, you do a deal, you have to find the deal, you have to form the PPM, the operating agreement, the subscription agreement. You have to raise the money, you have to decide if it's going to be 506B or 506C, and you have to do all this yourself. Well, in fund of funds, it can be a lot easier, let's put it that way, especially if you have investors who would like to invest with you. You pool the capital in your fund of funds. It's a typical syndication itself. You form an LLC, you write a PPM, an operating agreement, the subscription document. You do have some extra disclosure because of what's going on in the fund of funds. And then you do money raising. One of the things you have to worry about is, because you're not investing in real estate, you're investing in someone else's securities, you do fall under the investment advisor rules. And then, of course, you still have to do 506B or 506C, and all of that is going to depend on what's the manager doing. If the syndication is doing 506B, you need to do a 506B, but then all of your investors are counted in the 35 investor rule for sophisticated investors. If the syndicator is doing a 506C, you need to do a 506C so that all the investors are accredited, or your fund to fund has $5 million itself, so the fund to fund is accredited. Now, here's what this would look like. The manager found the property, done all that work, and is out raising money from the members. You talk to the manager and you say, I have a fund to fund. It's a separate syndication. I'm the manager and the advisor. My investors are passive and I'd like to come in and invest. What's interesting here is the members that the managing member brings in invest in an LLC that owns real estate. The members of the fund of fund invest in a separate syndication, and then you advise that syndication to invest in the real estate part of the syndication. So you're really not selling an investment in real estate, you're advising people on what to do. So this is where the Investment Advisors Act comes into play. What is it? Well, it's a law that regulates people and firms that provide investment advice for compensation. Of course, in a fund to fund, you're going to want to be compensated. Who is an investment advisor? Well, an investment advisor generally is a person or firm that gives advice about securities, is in the business of giving that advice, and receives compensation for it. So that's exactly what you're going to do. You're going to give your investors in your fund advice about investing in the real estate investment LLC. You're in the business of forming that advice, giving that advice, and your fund is going to compensate you for that advice. So you are an investment advisor. Now, there are people who must be registered as investment advisors under the Act. Registered investment advisory firms who are doing this all the time, financial planners who give advice about securities and receive compensation for their advice, portfolio managers who handle finances and investments for other people. And then here's where you come into play. Some syndication or fund managers, depending upon their activities. So this is the exception you're going to want to fall under, so you don't have to be registered with the Investment Advisor Act if you do a fund of funds. And so we need to talk about what are the activities that give you an exemption. Well, under federal law, first of all, if your fund of funds has 100 or fewer owners, you won't have to register. That's good. That's one exemption. Another exemption, it's if your fund of fund is limited to qualified purchasers. Well, those would be people with the $5 million of assets who want to invest in your fund. That's a little difficult one to find. And then the third one is the real estate exemption. So it looks like funds with 100 or fewer people and funds that invest in the right type of real estate will have 2 of the 3 exemptions. You only need one, but you'll have 2 of the 3. And then states have their various own exemptions if you're doing an offering and all the investors are just from one state. But what is the real estate exemption? Well, the real estate exemption is attractive because there's no 100 investor limit. You can have more than 100 investors. The investors do not have to be qualified purchasers. You can have sophisticated investors or accredited investors under a much lower standard. And it can accommodate larger real estate capital stocks. Now, that term real estate has been defined to be primarily engaged in purchasing or otherwise acquiring mortgages and other liens on and interests in real estate. So if in fact your fund is going to be involved in mortgages, other liens, and interests in real estate, you can qualify for the third exemption. Now, you're going to need an attorney to work with you on that because that's a little complicated. But right now, simply, if you want to know about what do they mean by interests in real estate, first of all, if your fund has qualifying real estate interests, more than 50%, 55%, excuse me, which would be mortgages and other liens on real estate. Or if your fund has real estate related assets overall, which would be the fund is going to invest in someone else's LLC, which owns real estate, and that your fund of fund is 80% of its money invested in other people's real estate offering, and you have less than 20% of your money invested in non-real estate or miscellaneous assets like cash. Maybe you take 80% of your money and invest it in someone's LLC and keep 20% as reserves. Well, that might be a problem. But I'm only saying that because that just shows you how complicated this can be and how you should reach out to a securities attorney to help you do this. You're going to need a real estate securities attorney when you do your fund of funds. You're going to have to do a private placement memorandum. You're going to have to do an operating agreement. You're going to have to do subscription agreement, you're going to have to be sure to disclose to the investors the way you're making money, because you might be getting paid from the real estate syndicator along with getting paid from the investors in your fund to fund. And then you have to make sure that you are within the 3 exemptions: the 100 investor rule, the qualified purchaser rule, or the real estate exemption. You have to be in at least one of those exemptions, or you're going to have to register as a registered investment advisor. And not registering as an investment advisor when you have to is a felony. Did you hear that? Not registering when you need to register is a felony. So call us, call the attorney that you're going to use for your securities offering, and they can help you qualify for the exemption. And yes, we do funds of funds. We'd be happy. We do them legally. We'd be happy to talk to you. So there's my contact information. The website, TNLLP. If you go there, you can get a free copy of the 5th edition of my book. It's a whole new business. And you're probably watching this on YouTube now, so be sure to sign up and subscribe to our YouTube channel. And this is Gene Trowbridge saying, I'll see you next time.
Thanks for watching. If this was helpful, give it a like and leave a comment with your questions. We read them, and they often become future videos. Subscribe so you don't miss what's next. And head to book.tnllp.com to grab a free copy of Gene's best-selling book on securities and crowdfunding. It's a whole new business.